Today, we're going to be going over exactly how I find my key levels to make me the profitable trader that I am today. Key levels are the most important things. So without these, we don't even know where we're trading at. Because if you enter at the wrong price, then the whole thing is flawed, because your entire plan is based off of that key level. And this has allowed me to have an 87% win rate for 2024 so far. Going over exactly what a key level is real quick in the simplest terms ever, it's basically a price level that has the most reactions in a certain area. That if price was going to break out of that certain price point, that it would react exactly how we liked it to react, as you guys seen in every single live trading video, unless we take a loss, which allowed me to capitalize thousands in literally seconds up to minutes. Now, literally a month into actually learning how to find these key levels, you'll be able to do this in literally 5 minutes on every single ticker. Like I usually trade only 4 tickers and I get that done in less than 5 minutes, because even though this is the most crucial part of your plan, because this is literally the foundation to your trading plan, it literally is the most easiest step if you just allow yourself to think of it in a more simplest terms. Now, we're going to start off with the 1 hour time frame. Why? Because I found that works the best. That works the best for me. And if it works the best for me and that allowed me to make the most amount of money, then why would I stop using this 1 hour time frame? Now, taking a look at Tesla, because this is something that I trade. Now, sometimes I have to go to the 4 hour and daily key levels, which is usually rare, but just in case the 1 hour doesn't look the best, I usually will go to that 4 hour or daily, or I'll skip the entire stock itself for the day. Because if it's not 100% clear, then what's the point of me even looking at that when I have 3 other tickers that I could potentially look at? Going into the key level, we're taking a look at Tesla here. And the main thing that I'm looking at right now, looking at this chart, is where is price reacting at the most and the most consistently. Now, the thing I want to look at is psychological level. That's usually where I want to see price reacting at. And why? Because when people buy or sell a stock, they'll put the limit orders, and they won't put a limit order at 191.54. No. If you're reasonable, most people will put their limit orders at 192, 193, 195 psychological levels. And this is why zeros and fives actually usually have more reaction depending on price action and stuff like that. But because people would rather sell at 190 than 191, just stuff like that. It's all psychological. Either way, I'm telling you what works best. Who cares about the backstory? 190, 195, 200, those usually react the most, but 192 could still react more than 190. It's just a matter of finding these levels in the first place. Now, just because it's a psychological level does not mean we're going to take that trade. You guys can see 189 psychological level, but that doesn't mean we're going to take it. Why? Because you guys can see it's not reacting well. How do we know that 189 is not reacting well? Well, if we take a look at 189, right, and we draw it out, we can see exactly why. Now, a lot of people, if you're watching this and don't know what key levels are, you have no idea what I'm talking about. So let's take a look, right? We look at this. The best reactions is when price is clearly reacting at a certain area, not above or anything like that. Now, this would have been fine, but then price closed above it. We don't like that, right? Because then there's another psychological level, a level above this that is reacting to better. We always want the best key levels, because let's say it broke 189. Well, what happened when it broke 189 last time? We came up to 191.6 and then immediately dropped. So there's obviously something there, and we could find a better reaction point, and that's exactly what we're going to do today. But I'm just showing you guys an example of a bad key level. I wouldn't take that. Now, we want to look for the biggest and the best reactions, and for right now, Tesla's not it. I mean, you could potentially trade 189, but for the sake of this video, absolutely not. Now, we're taking a look at NVIDIA. We clear all these levels, and we're going to go up to this 134. Now, this is all-time highs, 134. This is an easy key level. Now, just because we have a key level of 134 does not mean we're going to take it once it breaks 134. This is where time of sales and everything like that comes in, and you guys can watch it up there. But for the video's sake, we're only looking at key levels that we could potentially take, right? Because every single key level that we make is a potential trade. It's not a guaranteed trade, because if it comes up and it's so choppy, so slow, time of sales is super slow, buyers aren't there, sellers aren't there, we can't take it. But these have the highest chance, and these are where the areas that we're looking at price-wise to potentially take a trade. So 134, because it's all-time highs, 133.79. Why are we going to mark 133.79? Because that's all-time highs. Obviously, price reacted there before. It might react there again, and we want to make sure what's going on in that certain area, because if it starts reacting there, it's for a reason. And NVIDIA might not be the best example either because we're at all-time highs, but we could potentially find a downside key level. So we go out and you guys can see there's already reactions right there. This is what I want to see. I want to see price come up and absolutely die or bounce crazy off a certain level. You guys can see bounce, 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 bounce. There is a level down here, right? We also came up and rejected this certain area. These are all key levels. Now this broke out, but I'm pretty sure we took this 125 to the upside. 125, you guys seen it rejecting this high right here. This is what I also marked out. The high of this is 125.59. So we want to make sure that if we get in above that 125 and it starts reacting here, we already start to take some off if sellers are starting to take control at that 59, because look at what happened last time. We dropped all the way to 119. So we marked that out just in case, if it starts reacting there, it's for a reason. 125, and that's our upside level. You guys seen it ran all the way to around 127. A $2 move on NVIDIA on a Wednesday, that's an easy 30%, 20%. That's all you need. But we're looking for the closest downside level for NVIDIA right now. Potentially 130. Why? Because it's reacting here. What I don't like about it is this pre-market level right here. And then it also reacted here today. Now, if it already broke and looked disgusting, then I'm not going to take it. And then this is where we go into that 1 minute time frame. Oh, 1 minute time frame is a little too small for you guys. Well, listen, this is exactly how my win rate is what it's at. Because how do you expect price to react exactly how you want? And then you look back, if you're trading on the 1 minute chart, which is exactly what I do, and it reacted terribly. Like, for example, if you had a level right here, and then you go to the 1 minute chart and it reacts there previously, what makes you think it's going to react super nice like this breakdown right here? What makes you think that? Right? It's just not how it's going to work. So if price reacted like this at our key level, it's not going to react any better. It might, but you have a smaller chance of it reacting better than what's doing here. Now, even this, right? Look at what happened at 130. It broke 130, dropped like 50 cents, and then came right back up. That's not a breakout that I like to see, right? That's not a breakout that I want to be a part of, nothing like that. So 130 is eliminated. This allows us to eliminate more trades that we could potentially get faked out on and wait for the absolute best. This is why our win rate's 87%. Nobody's doing this. Again, NVIDIA downside, I'm not touching that. NVIDIA upside, 134 to the upside, that's something I'm looking at. This is why we have a variety of stocks that we could potentially look at, because sometimes it just doesn't look good. Now, SPY, and this is also helping you to not get faked out, because a lot of people like to force trades because they don't see their key level is 100%. They're like, well, I want to trade tomorrow, so I'm just going to put this key level out of nowhere. And some people are going to put 130, but not me. Now, 544 is a clear example of a nice upside level for today. Without even looking at what it did today, reactions. Look, every time it comes up, it can't go above that, right? So what do you think happens when we're at that key level again and buyers are really showing themselves on that tape? Once we break that 544, it's absolutely going to fly. Why do you think every single time, like, look at this 1 hour chart. Look at where it went after it broke that 544. Why 544? Because of the reactions. We want to see price reacting at a certain area, which means it can't go above or below that certain price point. And if it's struggling and it finally breaks out with enough buyers, what do you think happens? It's literally like a dam breaking. It's just going to explode. And that's exactly why we're able to make 20% in literally like a minute. Now, take a look at this. Another perfect reaction. I would take this to the downside. Like 544, like you could not get a more perfect breakout than this. We came up, reacted there intraday, which is super important because you don't want to just take this after all of that, because, I mean, what are the chances it continues and continues like that, right? We want to see a pullback. It reacted at 544, pulled back, perfect. Now we want to see it come up. We come up, reacted again. We came up, touched 544, came down. Sellers were trying to show themselves at that 544, and buyers just proved themselves wrong. That time of sales I know was going crazy. Buyers came in, broke that 544, boom, right? And I would probably even mark out this high day area just to be sure that I see on the ask that it's able to break that 03 on the time of sales. Once it did, I'm in, and jeez, that thing absolutely flied. That's a huge percentage. That's like 50% It's literally could have been 100% honestly, right? 544 to 545, 50, probably 100% breakout right there in literally a couple of minutes. So that's an example of that upside. Now, just because it broke like that to the upside does not mean we could take that right to the downside, right? Number one, we're $3 away from that. Number two, you clearly can see the direction that SPY is going right now, but that doesn't mean it can't go down, right? Stocks either go up or down. And, you know, a lot of people like the trend trade and stuff like that. But if SPY picks a direction down for, you know, today, for example, or tomorrow, right, we came up, but I took a Q's downside trade today, right? Even though the entire market came up, I still made 35% on the downside. And how did I do that? We saw 480 come up, comes down, right? 480 was something I was looking at for a potential rejection point. Came up, faked everyone out, came down. So if it's not going to go up, then it's got to go down. I wait for the confirmation. You guys can see the reactions here. This is the intraday key level for the rejection at that 480. Then I get into puts, 35%. We literally sell on that 479 break to the downside. Boom. Sold literally the low of that move and literally the low of this huge move. Our sell was insane. But just because it came up like this, right, it most likely will continue tomorrow, but we can always have our key levels to the downside because let's say it wants to come down and the sellers are there, you can't have a bias, right? If sellers are there, sellers are there. Or it's not going to go up if there's more sellers than buyers. This is not how it works. So this is why we also could potentially have this downside key level. And as you guys see, this 484 is looking phenomenal to the downside. It most likely will bounce at this 484, but this is where time of sales comes in, where we're able to see if sellers are there versus buyers. And we're going to have our key level here and just wait. And then 487, perfect key level, all-time highs. 487, psychological level. 487 is the next psychological level, 14 cents away from all-time highs. We're also going to mark out 86 because we could potentially anticipate all-time highs of this 487 once we break this all-time highs. So we could add that as well. Boom. So now we got our upside and downside key levels on Qs. And you guys see how much cleaner this is compared to something like Tesla. So why on earth would I ever touch Tesla tomorrow or like try and make key levels for tomorrow when I could just skip that and I know maybe the next day it looks better, the next day it looks better, when I can focus my attention on this. Take the best, leave the rest. If none of these key levels were setting up for tomorrow, then I would literally wait tomorrow and look at intraday levels to see if it's potentially something that happened overnight to where pre-market is setting up a key level, but like it's not worth it. Sometimes you're just like, all right, listen, I'm going to stay on the market just in case something happens, if something sets up intraday, but like you can't really prepare anything on Tesla. It just doesn't look clean. You guys can see the reactions on Qs versus the reactions on Tesla. You guys see it perfect. Came up, retested at 484. It's looking clean already. Even though that was like maybe like 3 reactions or something like that, it's still the cleanest reaction because we came up and then this is where it starts struggling around that 484 and then we continued higher, right? Even down here at this 481, same thing. It looks good, but it's way too far for us to take. And it's just too far for us to take. So why plan all the way ahead like that when this could get broken pre-market in 2 days or whatever? So there's Qs, there's SPY, there's NVIDIA, and there's Tesla. Those are the 4 stocks that I also look at. But this is literally how I find my key levels to trade. We can go over one more, a random ticker. Let's see if SMCI, even though I already have my levels on there. So like even this, right? For example, reactions. Now, I could have a level at 920. That doesn't mean I'm going to take it, right? If I say I want to take 920 to the upside, that does not mean that I'm going to be able to take that. I need the time of sales to look good at that 920 level. But that's a potential price point that I would be able to take a trade at. Now, SMCI, you guys can see the clear reactions down here around that 750 area to 740 area. Right, that's a downside level that I would be willing to take. But again, we're worried about tomorrow. We can go over Apple. See Apple, perfect example right here, 220. Boom. Why? Because we came up, huge move to the upside, and guess where we stopped out? 220. We don't just stop randomly out of nowhere. These are psychological levels. 220, and then we came down, literally an H. If you guys ever heard me talk about H, is where we come up or come down, and then we pull back, for instance. It literally looks like a lowercase h, but inverted. And we came down, people taking profits, and then we come right back up. 220 to the upside, and then we want to watch for 220.2 on the ask. Why? Because that's exactly where we stopped last time. So if we could break out at 220, I'll take this to the upside, but I don't even touch Apple because there's better stocks out there. That's just an example of finding a key level and how we found that in literally 2 seconds. So if you guys enjoy these videos, let me know in the comments down below. Even though I made this seem super simple, it's more about the execution at those key levels that make it way harder to take a trade. But either way, your win rate's like at least a 60% win rate if you just buy it at the 220 break and not even know what time of sales is. Add time of sales and you start getting good at it, 80%, 87%. I have 87%, probably 90. I'm humbling myself, probably like 90 something percent at this point for 2024, but I'll just say 87% because that's the last time I like fully looked at it on TradeZello. But this is how I find my key levels. If you guys enjoy these videos, let me know in the comments down below, and I'll see you guys in the next video. Peace.